Hey everybody, how's it going? I am Zach Richmond of the Richmond Realty Group, and I've got a great friend here.
Jon Sanderson from PrimeLending.
Crazy time out there right now. Nothing like we've seen before, but we've still been busy. We were classified as an essential service. I know you guys were classified.
We're essential service because you're essential service. We become by default.
Yeah,
essential.
right. What we wanted to talk about with you guys today is what we're seeing, what we're gonna see, and what we think will happen long term. So, John, what are you seeing in the mortgage side of things right now?
The mortgage industry has seen some big changes in a very quick manner. Interest rates, they had gotten very low, and then surprisingly, as soon as coronavirus became an impact on our lives, the mortgage market kind of fell apart. That was because of liquidity in the market, but now we're starting to see some of those things come back. To give you an idea, the mortgage loans that are a little more difficult to do, that don't go to Fannie Mae and Freddie Mac, which is the majority of the loans that we have, those are called non-quantitative mortgages. Those mortgages basically evaporated, but now they're starting to come back. So we're starting to see some turnaround.
So when you say non-quantitative, what would that type of loan be, or what type of process?
That's the type of loan that doesn't fit the standard conforming box, if you will.
So your basic traditional mortgage,
Right.
Those are still happening, but maybe your one-time, two-time builds where somebody's buying land and trying to wrap that into a home construction product.
Exactly, and construction is another piece that has
Yeah.
slowed down for a little bit of period, but now it's starting to come back.
Yeah.
So the QM loans, the non-QM loans are those loans that don't fit the standard procedures, like you have a salary type person. This is somebody that might have a little bit non-traditional type income, where they may be self-employed, and instead of looking at their tax returns may not be reflective of the actual income that they're earning or the cash flow that they're seeing every month. It's a little bit different type of loan.
Yeah.
And so now that's starting to come back. That was not funded by the government, those type of loans. They were funded by private equity firms. And so those private equity firms, they got out of the market because of the liquidity. Now they're coming back.
The economists are saying that in Q3 we should have a big pickup and have positive growth. I don't know what we're seeing on the housing side. So HAR put out this data for the end of April, and right now listings are down 27.6% in all of Houston. So we have, at this point in time, 12 months ago, we had 27% more listings than we have now. The active listings we have are 6.7% down. So that means that there's a little bit more active listings, but not too many more. And actually prices only dropped down 0.6%. So that's the April statistical data from this point in time last year and today. So what's crazy about that is, we knew that listings were going to be down because people are staying at home. There's not going to be as many people going out. But of that, prices haven't dropped.
Right.
And
that's great. That's fantastic news.
So what I do know is that this is not an easy time for everybody, and there's a lot of people that are going through some struggles. And I just want to tell you, this community is so amazing. We have so many resources, and I've been talking with a lot of people, a lot of organizations, a lot of charities, and there's so many people that are geared up, ready to help. And the hardest thing we have right now is that, some things slow down, some things are picking up, but people can't be afraid to ask for help. And it shows. We're part of the Woodlands Rotary Club, and what we did is, we can't have our meetings. We have a meeting every Thursday, and what we did is we dedicated our budget that we had for lunches, and we started to feed organizations and people around the community thanks to the help of the Woodlands Country Club. And so I'm optimistic because I've seen the heart of people in this community. There's a George W. Bush, whether you like him or not, he put out this video online, and it was, everybody needs to watch it, because what he's asking for is everybody to come together. I just want to read one of the quotes in there. He said,
"In the final analysis, we are not partisan combatants. We are human beings, equally vulnerable and equally wonderful in the sight of God. We rise or fall together, and we are determined to rise. God bless you all."
I honestly think that should be the theme of 2020. With everything going on, I guess the market update would be, things have slowed down, but we expect them to pick back up.
Absolutely. This is important information. The government passed what's called the CARES Act, that we're all very familiar with. And there's a lot of people that got stimulus checks and things of that nature. And there are people, unfortunately, that are losing their jobs or being furloughed, those kind of things. And of course, what's been very public is forbearance. And that is where you actually either reduce or you don't make your mortgage payment. And the government is allowing you to do that. What I would recommend is that you be cautious about that. Make sure that you talk to your mortgage company about that. There is no burden of proof that's necessary to ask for forbearance in this particular time and moment. This is very unique, this CARES Act. There's no burden of proof. Under typical situations like natural disasters, the mortgage payer has a burden of proof to show to the mortgage company that, look, I need a forbearance and here's the reason why, and they may have to provide some kind of documentation, job loss, those kind of things. In this particular case, you don't have to do that. So I would just caution anybody that's looking to do a forbearance to make sure that the mortgage company is, not going to record it as a negative to your credit, because they can technically, unfortunately. And keep in mind, what forbearance means is you can extend your mortgage payments out. Let's say not make them for 6 months, but at the end of that 6-month period, you got to make up all those payments that you missed. So usually in lump sum.
So you defer mortgage payments.
There's a difference between defer and forbearance. So forbearance is not making that payment, and then after 6 months or 12 months, you have a lump sum. Well, the mortgage companies are supposed to work with you at that point, after the forbearance, for another 12 months to make up those payments. You can make up those payments, maybe on a payment plan, something like that, but you need to pick up your mortgage payments at that point. So deferment, though, on the other hand, that typically requires a burden of proof on the person making the mortgage payment that they cannot, because of loss of job or something of that nature, or maybe they had COVID, so they were not able to work. Deferment puts those extra payments onto the back of the mortgage.
At the very end.
At the very end. But be cautious of that too, because there's a lot of fees and interest expense that get added.
So what do you think the biggest misconception is right now about what's going on in the mortgage industry when it comes to all this?
Well, most people are concerned about the fact that they may be furloughed temporarily, or they're a little bit cautious about their job and if it's going to be there still. So they're asking a lot of questions surrounding that. But the mortgage industry is still up and alive, and we're lending.
That's good.
And interest rates are very, very low. This is a fantastic time to be buying a house. Real estate is always a great investment. So my reasoning or my suggestion right now for being such a good time is, if you are still employed and doing fine, look at that step out into a house. And the reason is interest rates are so low. And so with interest rates so low, you have more purchasing power. And if you're wanting to stay within a certain budget, let's say, similar to the rent that you're paying each month right now, that's going to buy you more house when the rates are lower than it would if rates are higher. So it's a good time. It's a very good time.
It is a good time. Thank you, everybody. Thank you, educational system. Thank you, medical system. Thank all the government officials, everybody at work, trying to put us back on track to being back to normal. We love you guys. Thank y'all so much.
God bless them, all the frontline workers.
Zach Richmond, Richmond Realty Group.
Jon Sanderson, PrimeLending.
We're rooted locally and rich in community. Love you guys.